Okay, so now I'm going to explain the second cost flow method, or really the third, because I already explained specific cost identification. The second one that I explained through video was FIFO. So if you haven't seen the FIFO video, I would recommend you see that one first, because in my introduction I speak about the cost flow methods and so forth and so on, and I give a summary. So start with that video first, and I've already spoken about the different cost flow methods and so forth, and I'm not going to repeat it. I'm just going to go straight to the exercise. Okay, so like I said, if you haven't heard the FIFO, seen the FIFO video, please go to that one first. Okay, so LIFO, perpetual inventory system, and this is a same different problem, but pretty much same book, same pages. This is problem series A, 2A, LIFO perpetual inventory. Okay, so the book gives us this information, and we're supposed to determine cost of merchandise sold using the LIFO method. Okay, so I follow a similar um, a similar strategy as what I did with FIFO. Here it's LIFO, except as you may know by now, this is the sale, for example, and in the FIFO I would go to this layer first in, first out. Well, now we're doing LIFO. Now we're going to go to this layer first, and we will not move on to this layer until we deplete the first layer. Okay, so let's see how that's done. Again, I'm going to use the same method that I used with FIFO to come up with my answer. And like I said, you use whatever method and format you feel more comfortable with, the one that confuses you less. I like this way because it confuses me and it leads to less errors. So what I do is I go to my sale, and from there I determine what my cost of merchandise sold will be, right? So I sold 3,750 at 120 for 450,000. Just like in the FIFO example, this doesn't change. Sales revenue is going to be the same. So in this case, we have sales revenue of 450,000 and accounts receivable of 450 if we sold it all on credit. And let's assume we did. Now we need to determine the cost of merchandise sold. So under the LIFO system, we're going to go with the last inventory in. So we're going to cost this inventory using this layer's cost. And since this layer has more than enough units, that's the only cost that we're going to use, $68 per unit, right? So as you can see here, I costed my whole 3,750 at 68. I took it out of this layer here. So now my cost of merchandise sold is going to be 255,000. I already told you that the sales revenue was 450. So now we have more than enough information to complete the first entries, right? We have 255 for cost of merchandise sold. That's going to lower inventory. And these two entries are going to be the same under both systems. Accounts receivable 450,000 and sales revenue 450,000, right? So again, what's key with the method that I use is that I always roll over remaining inventory here, so that then I could look forward. And like I say, once you do this, you start again, and this becomes part of history. You don't have to worry about looking backwards. So now we'll look forward, and we have still two layers. As you can see, the layer from January 10 was depleted from 7,500 down in half to 3,750, and these are the two layers that I have to cost this sale here, right? So it's 1,250 sold. And then because we're using LIFO, last in, first out, we're going to look at the last layer that came in, the cost of the last units we bought. And we have more than enough. We have 3,750 to fulfill this sale, right? So they're all going to be costed at 68. So 1,250, which was the sale, will be costed at using the information from this layer, which is 68. Cost of merchandise sold is going to be 85,000, and we go ahead and calculate the remaining layers again, right? This one stays intact, 2,500 at 60. And this one over here gets reduced by 1,250, and it comes down to 2,500, right? And so these, the 85,000 and the 150 is key for my entries, right? We know that that's going to be a number to be used as cost of merchandise sold and offset with inventory, and the sales revenue is going to be 150. And so the entry would look something like this, right? Accounts receivable 150, sales revenue 150, cost of merchandise sold 85,000, and inventory goes down by $85,000. Okay, so here's my remaining inventory. We've calculated. Let's go ahead and let's just look forward, and let's forget about that in the background. That's part of the past. We did another sale. This time it's 500, and again, well, this is going to satisfy. This is going to be satisfied just with this layer alone. So again, we know it's going to be costed at 68, the entire 500. So the entire 500 is costed at 68, which gives me a cost of merchandise sold of 34,000. So you can see here, sales revenue of 60,000. So my entries here are easy. By now, you should have this all memorized. Accounts receivable 60, sales revenue 60, cost of merchandise 34, and inventory 34. What's my gross profit here? My gross profit is 26,000, right? Sales revenue minus 34,000 in expenses, cost of merchandise sold. Okay, so what's my remaining inventory as we move forward? Let's scroll this over. As we move forward, well, this 2,500 layer again remains intact. So that layer from January 1st was never used. We still have it at 60. This layer goes from 2,500 down to 2,000 because we use 500, and this is my remaining layers. So here we have something interesting. We have another layer that was added to on February 10, and that's a purchase of 18,000 units at 70. So which layer are we going to use on the next sale? Yes, you're right. This layer right here, the latest, last in, first out. Right? So we have a sale of 9,000 at 125, and as you may have guessed, we're going to use this layer here, and we're going to cost it at $70 per unit. And so cost it at $70 per unit. My last layer, last in, first out, 9,000 at 70 would be 630,000. So that's my cost of merchandise sold. My sale is given to me by the exercise, 1,125,000. And then I go ahead and calculate my remaining inventory so that I can, keep everything nice and neat so that I will get the right answers moving forward. So this layer here was not touched. It remains intact. This layer here was not touched. It remains intact down here. And of the purchase of 18,000, now we sold 9,000, and now we have 9,000 left at $70 per share for a total layer cost of 630. That was unnecessary information anyways. Okay, so the entry here of February 16 sale. There's the sale, there's the cost of merchandise, and here's the entry. I don't want to repeat myself continuously. At this point, you should have this memorized, right? So now we're going to do another sale, and this one on February 28. We have the layers identified up here. 8,500 was sold. Well, this layer is going to satisfy the whole thing. So we know we're going to cost it all at 70. So it's going to be costed at 70, the 8,500 at 70, for a total cost of merchandise sold of 595. Right, 595, and we have an accounts receivable of 1,062,500, sales revenue of 1,062,500. Okay, so that's the entry, and we go ahead and we recalculate what our layers of inventory are going to be. Again, this one was intact, so it remains the same. This one was intact, so it remains the same. And of the 9,000 here, we use 8,500, so we have 500 remaining at 70. Okay, and we did another purchase, so we added another layer on March 5th. And that's going to be 15,000 units at 71.60. And then when we do the sale of 10,000 at 10,000 units, well, we're going to cost it using the latest layer, which is 15,000 units at 71.60, right? And so that sale of 10,000, we will use this latest layer, which we have more than enough to satisfy this sale at 71.60. So the 10,000 are sold at 71.60 for a total cost of merchandise sold of 716,000. And so the entry is going to be very simple, as you can see here. Sales revenue is given, just like always. Cost of merchandise sold is 716. And then we go ahead and let's scroll down. We create our layers of inventory so that we can be ready to answer the next sale, right? And this 2,500 was intact, so it's there just the same. January 10th layer of 2,000 was intact. February 10th layer of 500 was intact. And of the purchase that we did on March 5, we used 10,000, right? So we have 5,000 left at 71.60. And that's used to satisfy our final sale here. As you can see, another purchase was made at 72. So for this sale, we're going to use the 72. But as you can see here, there's only 2,500 units, so it doesn't satisfy the full units necessary for that sale. So we're going to move up to the next layer. So we'll have 5,500. I'm sorry, the next layer is this one here, right? So that's going to be 7,500 units total, 5,000 at 71.60. It still doesn't satisfy the full sale. So we're going to go to this layer and use some of this layer, and I believe maybe even some of this layer here. So let's take a look at how many layers we used. Okay, so we use a lot of layers here. We used, just as I said, we used all these layers over here. Okay, so we used the full 2,500 at 72, the full 5,000 at 71.60, the full 500 at 70, and we used 750 of this layer at 68. So I costed them individually here. The total of all this is going to be 624,000, right? So that's your cost of merchandise sold for the full 8,750 units. It's a combination of all these layers above. And then we have remaining units. We have all the full January 1 layer here of 2,500. And of this 2,000, we use 750, right? So we're going to have 1,250 left at 68. And my ending inventory will be 235, right? These two. And let's just show the entry for this one here. Accounts receivable 1,093,750. That's the sales revenue as well. And the cost of merchandise sold of 624. Okay, so those are all the entries. Let's take a look at how the T accounts look. And let's just black this out. And so like I did in the previous exercise, I simply this was the journal entries. This is the posting of those journal entries. And so what you will notice is that sales revenue is going to be the same as what we had in FIFO, because sales revenue does not change. But the cost of merchandise sold is going to be different, 2,939,000, and my ending inventory is going to be different, 235,000. Now if you look at cost of merchandise sold, 2,939,000, you will notice that for the FIFO example, it was 2,904,000. For LIFO, we're going to cost merchandise sold higher. That's usually the scenario because usually prices go up, right? Usually there's inflation and not deflation in the economy. And when prices go up, if you use the last unit that you purchased, then obviously you're going to cost it higher because that last unit would have cost you more than your first units that you purchased. And we could see that very clearly here. The last units we purchased at 72. And the first ones, I'm not even sure this was the first ones were purchased at 60. So prices did go up. And so obviously cost of merchandise sold is going to be higher under that scenario. And your ending inventory will therefore be lower. 235 and FIFO, I'm sorry, yeah, versus 269. So the ending inventory is lower because you cost it more on your sales. Okay, so that is LIFO. I hope this video was helpful, and my next video will explain weighted average cost. Thanks a lot.